Many people often ask, which is a better investment, crypto or stocks? It's a highly debated topic among investors. So, in this video, we're going to compare stocks and crypto side by side and discuss their pros and cons. We'll look at the volatility of both, the risk of fraud, their long-term potential, and how easy it is for new investors to get started and make profits. Crypto and stocks are quite different in nature. When you invest in stocks, you're buying shares of real companies, and you have access to their financial information, plans, and profits. On the other hand, investing in crypto means buying digital currencies, and their value depends on what others are willing to pay for them. Crypto lacks the same level of publicly available information as stocks, making it harder to predict their future values. Now, let's talk about volatility, which refers to how much the market prices fluctuate. The stock market has a long history, dating back to 1611 in Amsterdam. Over the years, experts have learned to spot and predict trends, though predicting the market is still challenging. Some people, like day traders or penny stock investors, experience more volatility than those who invest in low-cost index funds like the S&P 500. While the stock market may seem boring to some, it offers a range of investments to match individual risk tolerance and financial goals. Cryptocurrency emerged after the 2008 financial crisis, so it lacks a long history to help predict price movements. This makes crypto prices highly unpredictable, and we don't have enough data to make accurate predictions yet. In the crypto space, there's a problem with pump and dump schemes.
And now the market. Oh! Oh! It went to zero! Yo! Damn!
Scammers buy a lot of a certain coin, promote it as a great investment online to increase its price, and then sell it at the peak, causing the value to crash and many people to lose money. This happens because creating new cryptocurrencies is easy, and there's little regulation, making it susceptible to scams. The market cap of many new cryptocurrencies is small, making them more vulnerable to manipulation through aggressive advertising. This can lead to short-term price fluctuations, similar to what happened with penny stocks and telephone marketing in the past. Cryptocurrency is much more volatile than stocks, but if you're careful with your investments, it doesn't have to be a bad thing. When it comes to investing, ease of access is crucial, especially for beginners. The stock market used to be difficult to access, with only wealthy individuals benefiting from it. But now, platforms like Freetrade in the UK offer free stocks, making it much easier for everyone to get started. Similarly, buying cryptocurrency used to be challenging, and many wish they had bought Bitcoin early on. However, unreliable websites made it difficult and risky. Nowadays, platforms like Coinbase have made it easier and safer to buy and store cryptocurrencies. Coinbase even went public, making it a significant step in legitimizing the entire cryptocurrency industry. They are even offering $10 of free Bitcoin to new users who invest $100 through their referral link. So, with the right platforms, both stocks and cryptocurrencies are becoming more accessible to everyone, making investing more attractive and attainable for all. Many experts suggest holding stocks for the long term because historically, the US stock market has increased in value over time. For example, if you invested $10,000 in an S&P 500 index fund from 1980 to 2018, it would have grown to $708,143. But if you missed just the 5 best trading days during that period, your investment would only be $458,476, and missing the top 10 days would leave you with $341,484. This shows that the stock market tends to recover in the long run, even if it dips in the short term. When I talk about long-term investing, I mean holding for at least 10 years, while medium-term is 3 to 5 years, and short-term can be as little as 1 day. Cryptocurrency's long-term potential is not as certain as stocks. Its success depends on how widely accepted it becomes in the mainstream. which seems to be happening slowly. Bitcoin is often seen as a store of value, like gold, due to its limited supply of 21 million coins, which could drive up its price as demand increases. Ethereum, the second largest cryptocurrency, aims to create a global platform for decentralized apps and smart contracts, which could revolutionize various industries, such as real estate and banking, by eliminating intermediaries and saving costs. Cryptocurrency seems like the future, especially since everything is going digital these days. It makes sense to have digital money as well. I'm also concerned about how our traditional money is being printed, without considering the long-term consequences, like inflation. Although cryptocurrency is still speculative, if Bitcoin and Ethereum can achieve their goals, long-term investors may see significant returns. There are many other crypto projects competing, so success might depend on which specific cryptocurrency prevails. I've noticed that young investors are more interested in crypto, while older investors focus on the stock market. Both options have their advantages and disadvantages. Personally, I choose to invest in both. I set aside 5% of my portfolio for crypto, which is more than what I allocated last year. This diversifies my investments and exposes me to some risk, but also the potential for high returns. It's not a matter of choosing one over the other. You can invest in both. The level of risk you take depends on your age and how long you plan to invest.